All right, good morning, y'all. It is Wednesday, June 23rd, so not going to be able to do the pre-market prep live this morning. I got to focus on working on a bunch of slides for the webinar and the upcoming class, so I got my hands tied this morning, but I figured put up a quick video here, give you all a quick look at what I'm going to be focusing on here today. So I will make it pretty brief, but if you look at the S&P 500, we've pretty much continued to have gone nowhere. So you did get a bit of a flush last week, then you get the impressive bounce here, all of which still doesn't get us out of this range. So pretty much we're looking at the same daily squeeze we've been looking at for over a month here, and we're waiting on that release of energy towards the upside or the downside. So you could make, I think, an argument for either direction. Look at a few different sectors here. The industrials start to break down last week, so we're losing momentum, we're losing structure, and they bounce a little bit over the last few days, which makes sense. You're down here at -3 ATR, so put some pressure on the market last week, but with the bounce here, that's helping the market bounce as well. And then with the financials, again, breaking down, losing structure, so this puts pressure on the market last week, but with a little bit of a, call it relief bounce, you get a little bit of upside for the market. So then you have the transports. Same thing. Break down, lose structure, you're at -3. That puts some pressure on the market. And then as we bounce up here back towards -1 or the 21, you get a bit of a bounce in the overall market. And then on the other side here, while there's distribution in those sectors, you've got a good looking trend here going on for the Qs. So get the let's look at the weekly chart first, because with the Qs here, that's a beautiful looking weekly chart, and it looks like it's just about ready to fire along. So, I do think, at least for the time being, path of least resistance for these tech stocks is going to be to the upside. Now, ultimately, if the market should roll over, that could put some pressure here on tech. But for the time being, that's a beautiful weekly squeeze. And one thing to take into consideration, good looking daily chart, it's a little bit extended. So you're up here at +2 ATR. I'd much rather take a big position down here at the 21 versus up here at +2 to +3. So we are a bit extended there. And then if you look at some of the components in the Qs, Amazon's been a total beast here, but it's also at +3 ATR. So it could continue to go higher. It could also pull back to the 21. So I would be a buyer on a pullback to the 21. Facebook has a good looking daily squeeze. I wouldn't say this one is extended. Apple, I would say, is extended, and then Microsoft, I think, is extended as well. So we know where the distribution was last week: industrials, financials, transports, etc. Now they're catching a bit of a bounce here, which makes sense because that's what tends to happen down here at -3 ATR. The big question is, do the industrials, the financials, the transports continue to bounce? Do they get back above their 21? And at that point, there's not too much pressure on the market. It's probably going to be looking pretty good. So do these sectors that got beaten down last week regain some structure, or do we get the bounce here and then we roll over for a new low, breaking these recent lows rather? So that's going to play a big role in the direction of the overall market. Do these industrials, financials, these transports, do they go down and break those lows and drop even further, or do they regain some structure? And then obviously the Qs here, that's going to play a role as well. If this continues to be the leadership, market could hold up okay. If we do start to see tech come back in, and you see the financials, the transports, industrials doing the same thing, then you look at that daily squeeze, I think, to potentially fire to the downside. But all in all, we're still stuck here in the same range. So for today's session, I think you watch this 30-minute squeeze here on the SPY futures. So dash ES. Here's what's interesting. Let's take a look here, right? All right, so 30-minute squeeze. This could be a great compass, so to say, for today's session. Ultimately, if this fires to the upside, that can lead towards the continuation of yesterday's momentum. If this fires to the downside, could be interesting. So looking at the structure here, negatively, well, we don't have stacked EMAs, so no positively stacked EMAs. The 10x bars here on the 30-minute chart are red, which means bearish momentum is increasing on the 30-minute chart. Now the 60-minute, the 2-hour, the 4-hour, those look pretty good here. But after we got sold off, what happens is these 10x bars, they go through the rotation. So as we're rolling over here, all the 10x bars are red, but slowly but surely, from a 30-minute and then a 60-minute and then a 2-hour, etc., you see the shift of momentum as the bars go from red to yellow, then to green, with yellow being neutral and green being bullish. So with a 30-minute squeeze here, those are things to keep an eye on. If we do fire short with the red 10x bars here on the 30-minute, do we see a shift of momentum to the downside on the 60-minute? Does that work its way up to the 2-hour, etc., etc.? So I think you keep an eye there this morning on that 30-minute squeeze. And then a position we took here in the options room yesterday. So we've got that short position on the SPX that expires in August. So we got plenty of time, and we got short strikes at 4,300. So we got time and we got cushion. In the interim, though, if this market wants to continue to go higher, especially these tech stocks here, we're looking for upside opportunity. So we're not going to sit here and watch the market rally and do nothing. We're going to look for something like a Google, which I think is pretty close to picture perfect here. You got a daily squeeze, positively stacked DMAs here on your daily chart. Monthly, weekly, 3-day, daily charts all got 10x bars, green. So bullish momentum is increasing. And then you have a 4-hour squeeze, a 2-hour squeeze, a 1-hour, all the way down to a 30-minute. All of them with stacked DMAs. So smaller position, but looking for a quick trade here into the end of the week. And keep in mind, we got that short position. So if we dump here, we got some good premium coming in. But for Google, we sold a put credit spread with short strikes at 24.30 for this Friday's expiration. Essentially looking for this 4-hour squeeze to fire long for a break into new all-time highs. Just looking for some quick premium. So I got to hop off the mic here, but I wish you all the best of luck today. Few different things to focus on. Keep an eye on that 30-minute squeeze there for the SPY. And then just, take a few minutes throughout the session to look at a few different sectors. The transports, financials, industrials, are they bouncing or are they starting to drift back lower? And then the leadership here, technology, you want to keep an eye on that as well. So I'll talk to you all Friday morning. We'll do it live then. But I wish you luck today. Be safe.